Okay, hello everybody. Welcome to Korean Atlanta Mentorship. So you have clicked a clickbait thumbnail regarding velocity banking, and I figured before we get started, why don't we show the original OG clickbait thumbnail face before the internet was ever mainstream, which is Kevin McAllister from Home Alone, right? And I know there's some of you freaking out and are home alone right now and thinking, "Man, I really want to create my own Excel spreadsheet, but I just can't do it." And you got this face, right? Remember that scene where he was like the aunt was asking him, "Can you pack your own suitcase?" And he was like freaking out. I know that there are some of you freaking out like that. In fact, I actually asked Meta AI to draw Kevin McAllister with the credit card freaking out, and this looks absolutely nothing like him. In fact, this looks like a malformed genetic clone with a little bit of Harry Potter mixed in, but it's okay. At least the Meta AI did its best. Now, if you're home alone right now and you're thinking, how do I study this velocity banking thing? Well, here's the thing. All you got to do is just create your own spreadsheet, right? And it's even easier than packing a suitcase because I do this all the time and I still freak out when I got to pack my own suitcase. No, I'm just lying about that. But to create your own spreadsheet, it's really easy. You just got to create a budget. And so let's go over actually what velocity banking is, right? So what is velocity banking? All it is a debt payoff strategy using your line of credit as your main operating account. And so if you're going to create one of these spreadsheets, it's really just two things you got to consider. Number one is a budget, and then number two is your line of credit as your main operating account. So I created this really simple budget, $4,000 a month of income, one credit card, $8,000, one student loan, one auto loan, rent, and then other stuff like food, gas, insurance. And actually, this is wrong, but don't worry about that. In fact, let's sum up the debt. It's 8 plus 15 plus 22. So it's 45K, so we're going to pay off 45K of debt, right? That's what we're going to do. Okay? And we make two assumptions, right? So we already did the budget. We make two assumptions when we do velocity banking. Number one, we make the same income, and then number two, we have no savings, right? And then we need to make our line of credit as our main operating account. So if you don't know what line of credit is, all it is a financial tool where you could borrow money, pay it back, and then use it over and over again, right? So if you have a credit card, that's a line of credit, either, but there's also personal home equity. Folks, I have over 280, I think it's $84,000 in lines of credit total. Because I'm going to tell you a secret that the banks don't really tell you, but it's not like illegal or anything. It's just that banks don't lend money to people who need it, right? So I always got it when I didn't need it. And I know repeat it over and over again, but a lot of people, they only try to get credit when they need it. But a bank is not like a restaurant, right? Like restaurants expect you to go to a restaurant when you're hungry and you don't have food. But if you go to a bank and you don't have money and you try to get credit, like they'll laugh you out of there. Okay. Now what we're going to do for today's spreadsheet is that we have access to a $10,000 personal line of credit at 15%, right? And again, people think that it's not possible to get these, but it actually is. I mean, take a look at this. I got this 15 grand personal line of credit, and I'm not even using it at all because I have so much credit that I gotta almost make an excuse to use it so I can keep my credit line open, right? So let's go ahead here and okay, assume we have a $10,000 personal line of credit. Okay, we can use it to pay anything, everything, right? So let's go ahead and copy these expenses. And let's do that. And we only have three debts to pay. We're gonna make it simple today, just because I'm sleepy, it's midnight, and I'm home alone, right? So, all right, so let's go ahead and do something called calculate called cash flow, which is income minus expenses. Now, you might be thinking, wow, this savings and this cash flow are exactly the same, right? It's true, they are exactly the same, but we got to make our line of credit as our main operating account, and that's the difference between the average American and the velocity banker. So the average American, regardless of income level, uses their checking account as their main operating account. Whereas we do velocity banking, it's going to be the line of credit, right? So the easiest debt that we can move into the line of credit is this credit card debt, $8,000, 30%. So let's go ahead and move this into the line of credit, right? And then the actual strategy is you're going to put your paycheck into that line of credit and then expenses out of the line of credit. That's all velocity banking is. And then this cash flow is how much your debts gets reduced after every single month, right? But you might be thinking, well, what's the difference between here and here? Well, because we simply moved that debt, guess what? This goes to zero, and now we have $714 in cash flow. Oh my goodness, this is so great. So let's go ahead and calculate the next month, which is the previous month's plus one. And then the previous month or next month's balance is the previous month's balance plus the previous month's interest minus our cash flow, so 714.08. And then the interest is calculated by the average daily balance. So let's get the average to here, multiplied by the interest rate, which is 0.15. When you say, where did I get that? This 15% interest rate, divide by 12. All right, so let's go ahead and copy it here. And then now you see that after every single month, right, the balance goes down by our cash flow right here. Okay, and then we paid off all that credit card debt in month 13, so we're good. So let's mark that as a highlight right here. So paid off in 13 months of 8K. All right, now we got to focus on student loan and the auto loan, right? Student loan and the auto loan. Now you might be thinking, which one should I pay off first? Should I pay off that student loan or should I pay off that auto loan? So let's think of it in terms of cash flow, regardless of the interest rate, although the interest rate does affect this because it's higher than the student loan. But would you pay off 22,000 to get $430 back or 15,000 to get 155? I would pay 22,000 because if I just pay 6,000 more, it's a little bit more than it's more than double the 155, right? So if you think of it, I'm sorry, not the term, the balance, I'm sorry, the ratio of the statement balance and the monthly payment, you'll notice you get a lot more bang for your buck. So what we can do is just focus on this right here. And here's the thing, we got only a $10,000 line. It's okay. That's not a problem. So what we can do is just chop it up into little pieces. So for example, let's just do this first. Let's figure out at 13 months what the balance of the student loan to auto loan is. And now luckily we have an updated calculator for Velocity Banking where if we just type in the original balance, the interest rate, and the payment terms, it'll automatically spit out a payment. And then if we want to know the latest balance, we could just type in months. So let's say at month, what was it, 8? Where are we right now? Oh, I'm so sleepy. At month 13, so 13 and 13, we can say that this is the latest balance. And so what we can do is just chop it up into little pieces, also called chunking or incremental payoff, and then just move it into, so for example, this one to $4,000 right here. So 4,000, and then we just kind of pay that off after every 1, 2, 3, 4, 5 months, right? And then just kind of rinse and repeat over and over again with the little chunk. All right, so now we just kind of keep going, and then we just do that a couple of times, and then so we should be able to pay off our auto loan, and then afterwards attack our student loan. Now, how long is it going to take us to pay off this auto loan? Well, that's a good question. That's why we have a velocity banking calculator for this, for amortized loans. So give me 1 second to pull it out. Okay, so we pulled it out right here. And this is a velocity banking calculator for Renatus, where I first originally learned velocity banking. So this is just go ahead and type in the numbers. And all we gotta do for chunk amount is just an amount similar to income. So let's do 5,000, 15%. I've already put in the loan information. And then what is our current income right now? Let me just quickly check. It is $4,000. Okay, $4,000. And what are our expenses? If I take a quick peek at the other sheet, it's everything except for the loan we're trying to pay off. So it would be the rent plus other plus the student loan. So let me quickly sum that up for you in the other sheet while you're looking at this beautiful velocity banking calculator, right? So how much would it be? It would be 2855.46. So let's go ahead and put that here, 2855.46. And then you could see that it takes us 1.3 years to pay off. Woohoo, 1.3 years. Awesome. So now let's go back to the other spreadsheet, right? And type that in. There we go. All right, so now we're gonna, where did I do all these calculations? So 1.3, so It's 13 plus 1.3 times 12. So that would be 28.6 months to pay off 30K, right? And then now, next thing we do is we just now tackle the student loan. So we'll say 29 months. How long is the what's the balance of the student loan, right? And then you'll see it's about $11,966.71. Again, with the Velocity Banking Calculator, it's so easy. We just plug it in. And let me go ahead and switch it, and we'll plug it in right now. All right, so let's go ahead and do that. And right, so now let's go ahead. And this is going to be a 10-year loan. And let me just redo these. So what is the original balance of that loan? It is $15,000, which is really cheap. Student loans. And in fact, the only way I think you can really get that is with lots of scholarships. And then what else? Lots of scholarships and probably going to community college. You know, like there's a community college in California that's like only $8,000 of tuition a year, I think. And I think the average school, especially if you're private, is like 20 to 40. What a ripoff. All right, so now let's go ahead and plug in the other numbers. So the current balance is 11,966.71. So 11,966.71. And then what is the interest rate, my friend? It is 4.5%. And it should auto spit that payment for me, right? And again, so now I got to just redo this. So I got to take out the auto loan since it's already paid off. And so how much is it with just the, what's it called? Your general expenses is 2,700 because rent is 1,200 and food, gas, insurance, other is 1,500. So it's 2,700. And now let's go ahead and do this. Okay. And how long does it take to pay that off? 0.7 years, right? So 0.7 years, and let's go ahead and do this. Go back to the other one, and then put in the zero point 0.7 years to pay the student loan, right? So now it's zero point 0.7 plus, or times 12 plus 28.6. That's going to be 37 months. And how much is that? 45K of debt. So 37 months is about 3 years. So 3 years to pay off 45K of debt. To pay off 45K of debt. So you see how easy that was, even though I kind of cheated with the Velocity Banking Calculator. But yes, we just basically have nothing to fear, whether it's packing our own suitcase or creating Excel spreadsheet, because most of it is just the basic budget. And we certainly are not going to look like a freaky rat clone of this kid. Well, I can't see he looks like a rat, but he kind of does. But anyways, all right. Well, that's it for today. Just a really short video. Actually, let me take a look at the count. 13 minutes. All right. All right. So yes, just another quick review of Velocity Banking. How to study velocity banking when you're home alone. So step one, you got to make that little clickbait face and act like you're shocked and possibly hold a credit card. And step two, you got to create a spreadsheet. See how easy that was? Yep. All right. Well, this is Korean Atlanta Mentorship. So have a great night and we'll speak next time.